Hey there traders, welcome back for episode number 138 from the StockBandit.tv. Hope you've had a great weekend and you're getting ready for a brand new week of trading. When that opening bell rings on Monday, you and I have got to be ready. So let's take a look at the major averages. We know that's what's going to influence and impact how individual stocks move. And this is really where our trading week should begin. So that's where we start on Sundays. Now, last week was a pretty interesting week. We rallied all 4 days, and by that I say all four. We did have a holiday shortened week last week. Remember, the market was closed on Monday on July 5th to observe the July 4th holiday. So prior to that, we had sold off a great amount here. Big slide for the NASDAQ here. We had that lone up day right there. By the way, if you're not watching this in full screen, go ahead and click that in the player. You'll see this much more clearly. But throughout this slide right here, we had one advancing day, and for the NASDAQ, that was a 6-point bounce. Very minor bounce there. So we saw this relentless selling, which brought the indices to new correction lows, and we bottomed out on July 1st. And I say bottomed out, that's a temporary phrase. We don't know yet if that's going to be the low, but for now we have turned higher from there. So last week, very nice rally. We did reclaim some levels on the way back up, including 2100 here for the NASDAQ, and at the end of the week we reclaimed this 2185 level where this white lateral trend line is. We're now getting in to start filling this gap right here, and depending on how you measure the gap, it really goes up to the 2205 to the 2220 level. So pretty good bounce underway. Let's see if, first of all, if we can fill this gap. So we've got a little bit more room here in the short term to run, despite the fact we've come a very long way in just a few days. And the next thing is going to be if we can hold these lows. If the July 1st low is able to stick on the next pullback, then we may have some conditions where this market is trying to actually make a change of direction. For now, it is still very much a trader's market. These moves have been non-stop and they've turned on a dime. And that really goes back all the way to the April highs. We've seen all these back and forth moves, big reversals, and there's no second chance to get on board. So for those who are anticipating and they're early, let's suppose that during this decline right here off this June peak, let's say you're anticipating a turnaround and you get long somewhere in the stretch of this. You're early and you have to endure some serious pain before you get a bounce to let you out. However, if you're waiting for confirmation after a low has been put in for things to start turning higher, you've got to chase stocks higher because they've already been turning and running. So it's really not an easy market to be trading right now. It's definitely one for the nimble and for the quick, and otherwise it's a good spot to be waiting on the sidelines, just sitting and waiting patiently for that higher low to be formed to where we can then start trading alongside with much more confidence. Let's move on. The S&P 500 also broke its lows just recently and then turned higher last week with 4 consecutive advances. Nice consistent upside. We saw some upside follow through for the first time in a few weeks, and we did reclaim this 1065 level. That was the May 6th low, and it really was respected for several weeks after. So we're now back through that. We've got the next real key level is right up here. That's 1105. That was, of course, some resistance right in here. So we've got room to run up there. Let's see, more importantly, once the next pullback comes in, how far does it carry? Does it hold above these lows? That's going to be the most important thing. For the Russell, this index is still marking lower lows and lower highs. So the trend is still down here. And we're channeling lower, but we're bouncing within this channel. We also reclaimed the lower end of recent support, which was the 607 level. So last week we rallied back up through that level. This index has an unfilled gap that goes up to about the 641 level. So it's got a little bit more room to fill that next technical spot. Then of course up here, a big level at 670. We're a long way from there, but that's still a level that we're going to encounter one of these days once again. For the Dow, this index rallied sharply last week off the lows. It's now approaching this 10,260 level. That was some resistance back here during late May, early June. So that's a level that we've definitely seen before. We're approaching it once again. Let's see how this index gets treated if and when it gets there. And finally, one more look at the VIX. This is the fear index, which of course has been turning lower quite sharply here. 6 consecutive declines for the VIX. However, Friday's decline was an inside day, so that might mark a little bit of a pause. Let's see, more importantly, if stocks happen to turn lower, we could expect the VIX to turn higher. Let's see how it treats this 30 level if and when it's approached again. If the next bounce stops short of the 30 level, that would be just another confirmation that this market is trying to change directions here. But for now, we're waiting for more technical clues to emerge. Thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.